What's good, y'all? It's Joel, and I'm coming at y'all with another video. So for this video, I wanted to do the recap of July 7th. So on this day, this is NFP. So just as another reminder, the past few videos I did that went over July 3rd and July 4th, um, it also touched upon the full trading week. And in that video for the NASDAQ July 3rd recap, basically highlighted that Monday is the only day where I would actually trade this pair because Tuesday, July 4th is 4th of July and I do not trade on bank holidays. And July 5th in the afternoon, there was the FOMC meeting minutes event, which whenever I see that on the calendar, I don't touch that day at all. And for the rest of the week, this was also NFP week. So if you see on Friday, right, you see non-farm employment change, as well as on Thursday, you're also seeing the non-farm employment change as well. So these 2 days, I would not even open my trading view. Like I would literally, like after Monday's trading day, I would literally take the rest of the week off from trading and just show up again the next Monday, which is Monday the 10th. Um, but I just wanted to walk you guys through this day as well, just so you can have an understanding as far as why I stay away from these trading days. Usually it's because there's heavy manipulation and more times than not the market doesn't deliver a setup on these days anyway, so it's really no point in me being behind the charts. Like I would want to only trade on days where uh, I can maximize my probability, right, and only take high probability setups. I don't want to just trade just to trade. Like I want to make sure if I'm taking a trade that I'm confident that the trade will go in my favor and allow me to profit. So, like I always do for every one of these recap videos, I always begin at the 8:30 mark, just because beginning at 8:30, that's where the hunt begins, the liquidity hunt begins, and 9:30 for the stock market open. That's also you can expect uh, price to begin going after liquidity pools. 8:30 is also when a lot of events happen as well, which is one of the reasons why we like to begin um, at 8:30. So here, this candle here is from 8:15 to 8:30. And once again, we're on the New York. We have our trading view set to New York time, or you can click the time at the bottom and choose New York. So here, this yellow candle is the 8:15 to 8:30 candle. So from this point on, we want to look left and mark the most obvious swing highs and swing low because those are where our liquidity pools will be. So if I look to the left, right, the most recent swing high is this candle here, where the candle to the left and the right are both shorter. So I will mark this and highlight this as our buy side liquidity. Super simple. And we do the same for our sell side liquidity. We look to the left before 8 o'clock, right? Ideally in the London session, which is the green shaded area, or previous, where is the most obvious swing low. So at this point, if we look to the left here, it would be this level right here. The reason for that is because this candle is in the New York session, right? This brown is the New York London crossover, so the brown begins at 8 o'clock. I do not want to use any swing lows that are using, that are involved with the New York session. I want to highlight any of the liquidity pools prior to New York session, which would be this swing low right here. So now we can jump into the 1 minute time frame. So remember, right, if we go back to the Forex Factory, the economic calendar, right, you're seeing that at 8:30, this is when we can expect to have NFP. And the reason why I stay away from NFP, I never trade, I'm never buying a charts for NFP. I never trade NFP because a lot of heavy manipulation happens, and the traders who trade on these days are usually the ones who are just gambling their accounts, right? They think that they can just trade NFP and just, run up a quick bag and make a lot of money really fast. But like that's not why we're trading. That's not why we're in the market. We're in the market in order to make money and also protect our account. But the priority, number one priority when trading is to protect your account because we want to maximize the amount of time we can stay trading, right? We don't want to have an account one day and then blow it the next, right? Like we want to be able to have an account and have it continue feeding us for the rest of our lives, right? So this is why it's super important to be patient in the market, and there's no reason to chase after these highly volatile news events because more often than not, you're gonna get burned at some point, and that's no fun, right? I'm trying to teach you guys how to be successful in this industry uh, by giving you responsible advice, right? And also teaching you what's been working for me and what to stay away from so that you know for yourself, right, what you should and shouldn't do. And sometimes knowing what you shouldn't do is just as important as knowing what you should do, right? So in this case, once again, it's NFP. I would not be trading. I'm normally not behind the charts. This is just to show you guys what an NFP day looks like, right? So we've marked both our buy side and sell side liquidity pools. So then now beginning at 8:30, right? This is the first 8:30 candle. You see price shot up. So just imagine if someone was trading and was expecting price to go lower, right? Imagine they were in a sell position and you know they were trading without a stop loss and seeing a candle shoot up this high, right? Like they would be in heavy drawdown, maybe had experienced margin call or maybe had a blown account like off rip, just off this one minute candle that shot up so high. So anyways, you see that price came up here for the buy side liquidity. What I also like to do, I also like to put an eyeball. I didn't do it in the last two videos, which I'm surprised I didn't, but I always put the eyeball to let me know that liquidity was taken. So in this case, right, buy side liquidity was purged into. So now we have this eyeball here. And at this point, once we have liquidity that's purged, I like to mark the last structure point. So in this case, right, liquidity was purged here. Although this is the most recent like swing high, I'm not going to use this level because there's also another wick right here that makes an equal low. For me, I like the swing low to basically be on an island by itself. I don't want to see um an equal low like a double top, double top or double bottom. I want to see it to be essentially on an island by itself. So I would use this level as the most recent swing low. So already you can see that this is not an ideal day to trade because literally, if price were to break structure and go down, price would have to literally break this structure point here, which is right next to the sell side liquidity. So it's already not an ideal scenario to trade, right? If price ever came down and broke this level, there's no point in taking a trade because the final target would be down here. But anyways, let's just keep going for the sake of this, right? You're seeing price push up, still push up aggressively. So now, right, you see price push up, still pushing up, right? Still aggressively pushing up. These are 1 minute candles, by the way. Massive 1 minute candles, right? So see price push up aggressively. Now you're seeing the first bearish candle. And then now you're seeing price move down aggressively, right? It's pushing all the way down super aggressively. If we could just like speed this up just a bit more, right? So buy side liquidity was activated and now price was literally just melting. So, we can expect, although we won't be trading, right, we can expect the sell side liquidity to get purged, which it eventually does right here. And this all happens before 9:30 because this candle right here is the 9 o'clock candle. So from 8:30 to 9 o'clock, that 30-minute window, both liquidity pools were taken. Um, so in a situation like this, if if this wasn't NFP, if this was like a regular trading day that had like regular news at 8:30, or even if it didn't have news, if this was just a regular day and you seen that both liquidity pools were taken, you stop, like you're done, like the trading day's over. Because what makes this trading setup high probability is when you have these liquidity pools that are still available because you can expect those to be targets for the market to reach for, right? When one pool is taken, you can expect a break of structure and then for the market to begin trending in the opposite direction to attack the opposing liquidity pool. But you're already seeing from Monday, July 3rd, Tuesday, July 4th, and now Friday, July 7th, you're seeing the repetition of how price keeps pushing up into buy side liquidity, breaking down, and then going and attacking sell side liquidity. You're seeing that the market is going after both liquidity pools, which explains why a lot of traders lose in this industry, right? It's not like the market manufactures these um I guess, patterns or support and resistance trend lines, right? Like the market creates all these things so then it can create orders and then move price to then attack those orders, right? And essentially just go after the liquidity. Obviously, liquidity and inefficiencies are what the market goes after. But you're seeing here, buy side gets purged and sell side. And there's of course many other situations where um, you would see the sell side get attacked first and then the buy side. But essentially, the market is just playing both sides, right? And this already happened at least 3 times this week. So all it is just recognizing what's been going on, and then in the future, if the market, when the market provides you with, all your confirmations and an entry, right, at a fair value gap, you have the confidence to take it because you see these events happening over and over and over, day after day, week after week, month after month, right? This keeps happening. So now you're probably thinking, oh well, what did price reach for? Like price shot up, I don't even know how many pips, like aggressively in one direction, and then literally just turn back and push back down aggressively in the opposite direction. Well, if we look to the left, right, we see that price came and attacked this liquidity pool right here, right? So I would just mark it with array so you guys can see a lot better, right? I'll just put this buy side liquidity as well. You see that price came, it shot up, not only taking this liquidity pool right here, right? Not only taking this liquidity pool right up here, it also pushed up and attacked this liquidity pool up here. Now I'll go to the 5-minute time frame so you guys can see it better, right? So this level here, right? Retail will see this as quote unquote resistance, or people will see this as a double top, and a lot of traders will sell. But also you have the breakout traders, right? If I do this, you have people who will have their buy stop set at this level because they're anticipating if price breaks this level, then we should expect price to continue going higher, to continue going bullish, right? And there's breakout traders who, once they seen price break above this level, they start buying, 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 thinking that price is gonna go higher, when in actuality price is really just going up to activate the orders to then push price down aggressively, right? And this happens often. This happens all the time. So price came up, a few pips above that level, activate the orders, and then aggressively shot back down. This is not by accident, right? Like this is being done on purpose to activate buy orders so that the market has the counterpart available so that it can aggressively sell back down. If you have a million buy orders that are available, that are placed in the market, then that allows you to put in a million sell orders and, have price not only go up like this, but then also push right back down. So this is the game that being played, that the market does over and over and over. Like this phenomena repeats. And I've just showed you this 3 times in 1 week of this happening, right? So if this happens 3 times in a week, then you know we can expect this to continue happening in the future over and over. It's just a matter of being able to train your eye and just train yourself to be able to spot this happening. And then once you have the confidence and you've seen it unfold so many times, when it is unfolding in real time, like the light bulb is gonna go off in your head. Like it's just gonna be automatic. You're like, okay, that's my trade, like that's my entry. And this is a major paradigm shift, right? You can go from uh I don't know what your previous strategy was, but like you can go from those traders who take so many different trades a day to now only taking one trade a day. And if you're only taking one trade a day, 2 trades max, following proper risk management, it becomes a challenge to blow an account, right? Like you're being super responsible with your trading with risk management, right? And you're only taking high probability A plus setups. This is what I mean, that the market is just playing this game like it's just taking most traders on for a ride. And for me, I would never trade NFP, so I wouldn't be behind the charts. But even going back and looking at this, you can learn so much, right? Because you're seeing the game that's being played with the market. The market is just pushing price up to activate orders, for the liquidity, to then push price in the other direction to then take the opposing liquidity. So once again, I just wanted this to be a really short video. Hopefully this helps open your eyes to the game that's being played right in the market, that this happens over and over with the Nasdaq pair. This also happens with like the S&P, but for me, my preference is trading NAS. I think NAS moves better, like it moves, it's quicker, it moves more aggressively. So a lot of these moves are exaggerated, right? You tend to see like a lot more fair value gaps, things like that. Um, but yeah, I hope you found this video to be helpful and insightful, right? And I'm just gonna continue doing these daily recaps until we get to the live date in August. Like today, while I'm recording this video, is August 8th. Oh, sorry, August 9th. And I don't trade the entire month of August, so you won't see me take any trades, but I can still do those reviews for those days just so you guys can have a better understanding as far as why I don't trade on August, during the whole month of August. But until then, I'm just gonna keep putting these daily videos for all these days so you guys can um, begin seeing what I'm seeing and, hopefully adopt this as your strategy if you're an aspiring trader and, you know, be able to hopefully do this one day on your own. That's the goal. I want to help create independent traders to help you guys get funded and essentially just crush it and be able to take care of yourselves and your family. So that's my passion, that's my motivation, and so that's why I'm putting out the all this content for you guys for free, just so we can grow together and just be the best traders out there. So if you found this helpful, please leave a like, subscribe, do leave a comment if there's anything that was unclear, any questions you have, anything you want to see me touch upon for a future video. I'll be more than happy to do something like that for you guys. Um, yeah, I'm just super excited to keep pumping out content. So, if you found this helpful, uh, anything, if you want to leave a like, subscribe, comment, anything will be greatly appreciated. Do appreciate all the support. So, thank you so much. This is Joel once again. I'm out. Peace.